Craig, as you took a look at Netflix yesterday and you look out into your coverage of the streaming universe, what changed for you this week and as you look forward?
Well, I think yesterday's results from Netflix were a reminder that the U.S. is going to be a tough market because it's such a crowded market, right? Netflix had the landscape all to itself for an awfully long time. And there are some that would argue that that's good enough that its momentum will sustain itself without a problem. But I think you have to be at least a little bit cautious when you see the number of new services that are starting. And remember, a lot of that competition really wasn't even there during the most recent quarter. So we're still in the early stages of the ramp up. And by the way, it's not just that there is competition for the number for eyeballs and time spent. It's also that these new services are coming in at awfully low prices, and you have to at least be a bit cautious also about, well, what does that mean for ARPU for all of these services going forward?
Craig, like you said, it's early days, but in the horse race that is the streaming wars, who do you see emerging right now, at least as an early winner in this?
Well, look, my own concern is that there may not be a lot of winners, but I think on a relative basis, Disney's strategy of go big or go home, as my partner Michael Nathanson has called it, is very likely to mean that they are going to be one of the winners here. Again, at least relative winners here. They'll certainly get subscribers. You're seeing that already from all of the early data that they're getting rapid uptake of their service. Whether or not this can truly be profitable, and profitable on a scale where it starts to fill the gap that these services create for legacy media assets, though, is the real question. You know, with Comcast Peacock, it's not just can you get people to watch it, and even can you get advertisers, but what do those economics look like when compared to the legacy of Comcast cable networks, or for HBO Max at AT&T? What does that look like relative to the legacy of the Turner cable networks inside AT&T? Those are hard problems to solve.
So, Craig, when you take a look at Comcast, AT&T, their HBO Max service, and the pricing models, you have some companies coming in at a low bar at $4.99, others a little bit more expensive, $13, $15 or so a month. Where do you see the pricing wars? What would be the right pricing strategy?
Well, right now, I think everybody is pricing probably below what is a sustainable number. So in the same way that you saw the virtual MVPDs, as they were called, the YouTube TV, Hulu, and so on, and at the time DirecTV Now, came out at super low prices and then had to raise them and suffered real churn. I think that's a risk for this industry. I think there's a bigger issue here, though, that remember that Verizon is giving away Disney TV Plus for free. AT&T is going to be giving away HBO Max for free to at least some of its wireless customers. T-Mobile gives away Netflix for free. Those are just the wireless companies, and you're going to have other companies. Comcast is going to be making Peacock available to cable customers. There's a risk here that American consumers get trained to believe that the entertainment-like services, because all these are entertainment, not sports, but for the entertainment-like services, that the price that they should pay is something like zero. That's obviously troubling.
What about the difference between an ad-supported model or a more subscription-based model? What works?
Well, we haven't seen the ad-supported services yet to be able to judge very well, but remember, what Comcast unveiled a week ago caps the advertising load at about 5 minutes per hour. So far less advertising than what you're used to seeing even in subscription-sponsored cable. So if you're going to be able to generate enough revenue to make that a really compelling business, you're going to have to get a big uplift in CPMs, or the price per thousand viewers that advertisers pay for. And that will depend on ultimately how good that advertising is at driving sales. And we just don't know yet. But they face an uphill challenge.